no major physical ailments from shoveling so much snow. So we've started our broadcast, and of course last week we're going to go through the market. We talked about a couple things. We've gone through in just 2 straight days a McClellan oscillator reading that was somewhere north of the 150 area, and now we're of course in negative territory. This is something we shared with you guys. We continuously try to share the indicators that we have that gives us insights as to whether we have a broad-based rally continuation or if there is cause for concern. And so looking at the spread, the NASDAQ still remains the widest as last week we saw that the S&P started to decline more than the NASDAQ. In fact, I'll share with you that our indicators did not generate a weekly sell signal in the technology space. And we have Apple earnings out today, so starting with our very first thing, our announcement, our daily positive thought, make no small plans, for they tend to have no power to stir the soul. It's anonymous. And I think that we need to make plans for our investment. We need to make plans for how we're going to trade, and we need to plan for the week. And what does the market look like? So I think that way we can kind of, for me, the old adage of a trade is you first look at the risk. What's the risk? Even for a day trade, what's my risk? How many points do I have to risk? Then I can kind of figure out quick math. If it's a 2.4 point, I know what that in terms of dollar amount is per contract, 2 points being $100. So do I want to, is this the trade that I think I might be able to get more than 2 points or 4 points out of the trade? And then you have a better way of committing to a position. So if you're planning on just taking a couple ticks and scalping, then you really don't get anywhere. And I think that's what we need to really focus on this year, is how do we really generate decent trades. And most of the trades that we generate that are the big kahunas, and I mean this sincerely, are not from day trades. They're generally specifically from a swing trade, a position that you put on, and you do your analysis, and you have the right idea of your committed risk that you're going to afford to lose, and you give it time, and then you have to let your plan kind of work for you. So therefore, I think the daily positive thought, it is applicable for trading. Make no small plans, for they tend to have no power to stir the soul. I don't get motivated for $15, $20, $100 here, $10 there. I just don't get motivated for, that's not what I come to trade for. And so I think that's the key. We need to make plans. We have to have a position, and yet then again, we don't want to lose our money, so that's why we use risk capital. So that's why we come here, and that's why I do my homework. That's why I look at certain trades and certain areas of interest. If they're too risky, then I look for other areas. In fact, we've done that with looking at staying away from high flyers and looking for defensive plays. And if you noticed last week, we talked heavily about Kimco Realty. We talked about Exelon, which was in the utility space. And we were kind of concerned about the overall breadth of the market and some of these indicators. So where do I see the market going at this point in time? That was a weekly chart, by the way, and this is a daily chart. So looking at a daily chart, it's suggesting we are in some significant oversold levels. So we could see a 1 to 2 day bounce in the market, at 1 to 2 day. And I will share with you in just a few moments why I suggest a 1 to 2 day bounce. And I think there's a lot of strong support under the market. The NASDAQ, I mean, as you can see here with this little uptick in the red versus the strong downtick in the black, and that's the spread relationship between the NASDAQ and the S&Ps. Now, looking at the actual spread differential, we definitely cracked this area, and I think from a daily perspective, looking at a daily perspective, we could see that spread still kind of, as we get into value, down into this 88 handle. So what I wanted to say is that it's not going to happen overnight, and I think that the market's going to probably give you, you know, and I'm sure there's the bottom pickers in here that are, you know, are looking for value in stocks, but we did generate some weekly sell signals, and I think we're going into a little bit of a bounce, but boy, I'll tell you what, I would get aggressively long if we got down closer to this 88. I would get aggressively long if we see perhaps the move down into the negative 270 area, because on looking at the McClellan oscillator, it's just an area that we find better value. I think that the way the market has traded over the last 2 days is suggesting to us that, or to me, that there could be a multi-week decline. If we take a look at our, and a multi-week decline, let me define this, means a potential trading range, all right? A potential trading range, and here's what I'm going to look at next is the Commitment of Traders report, the seasonal trend. The commercials have been covering their short positions. The hedge funds actually, and this is a weekly chart, so the small specs are long the market, and they're going to be praying for a pullback to the upside. Looking at this weekly chart, this is a very ominous formation. Typically, when we've gotten sell signals in the market, they've lasted several weeks, at least 2-3 weeks, at least 2-3 weeks. See, from the reversal, 1-2 weeks there. So if the market is going to act fairly bearishly, then it's going to stay underneath 1806. And so there's several different layers which we'll get into this morning, but the majority of the market that I see with my indicators is that we are going to be looking at least a chop city, and I think the market's going to struggle from traders wanting to see this thing go down and buyers wanting to see this thing go up, and it's going to still see a sector rotational grind. The Commitment of Traders report did reflect that last week. Now this is a mirrored effect. This green, we're really focusing on this net change right here. So we saw that the general public was actually starting to add to long positions, and last week, as of Tuesday, as of the CFTC last Tuesday comments, that the small speculator just started to get aggressively long the market, and the hedge funds were changing ownership. So there is a change of ownership here, and so I think that's why we're going to see some two-sided trading in here. The bright side of the market from the beginning of the year, and I wanted to take a look at all the sectors. The bright side of the market is the regional banks, not the XLF, which is way down here. The XLF, remember, is a diversified financial exchange traded fund with insurers, exchanges, the CME's in there, credit card, American Express is in there, and some of the large banks, JP Morgan, Wells Fargo, Citi, etc. But the KRE, that's the regional bank index, and that's the one that I've been talking about, has been very strong, and it is the least, as well as looking at utilities, which is still positive on the year. So this is a sector rotational grid that we're looking at to find out what's the net percentage and what's the strongest and weakest sectors. As you can see, the weakest sectors here is materials. We've got industrials so far. Consumer discretionary is this fuchsia here. Everything is color coordinated right in here. So when we start to see from the year-to-date perspective, and every week, if I don't share it with you, remind me to say, hey, what's the sector rotational grid looking like? Because what we want to see is if we get back to a positive area in this, and this is a daily chart since the beginning of the year, what we want to go back and make sure that I've got the beginning of the year. Which when I changed it from weekly to daily, it didn't give it to me, so bear with me. There we go. So that is still accurate. So we still have, looking at the markets, healthcare, we're looking at the best performance. When we start to see everything go back up above that zero line, when everything starts to go back above that zero line, that's when it's safe to know, when we see all these sectors from a year-to-date perspective start to go back above that zero line and start making higher highs, that's when you can get aggressively long. Right now you have almost every sector except for XLV and XLU still positive. Everything else is, like, as you can see, negative. But the least performing in the financials is still the KRE, the regional banks. Now today we do have regional banks such as Zion coming out, Apple's coming out after the bell today. If you look at your announcements, you'll see we have ASA Gold, Jim Beam, Caterpillar, Roper Industries before the bell, after the bell. I've got Apple, GG, which is Graco. I thought it'd be interesting to see Graco. An old blast from the past, Rambus, Seagate Technologies, Steel Industries, Wynn Resorts, U.S. Steel, and Zion bank shares. So I'm looking at the market and I'm thinking to myself, you know, the public's long. They're going to defend that until they get a little bit more unwound with financial losses. And I'm looking at this McClellan oscillator. We're near an oversold condition on a daily basis, but not a weekly basis. So now I go over here to my advanced decline, and I'm starting to gather evidence that says, okay, I'm seeing more trading range rather than end-of-the-world crash in the market. So with that said, when we take a look at our daily charts, and yes, Friday got ugly. In fact, Friday's comments, I was like, I thought towards the end of the day, this might not be a bad idea for a credit put spread, but you know what? Typically, I couldn't find any value, and I didn't want to do with the ETFs. They close a little too early, and you can't. The futures was a little bit hard to manage. But in any event, we had this area, this yellow of support, and that's where I think we need to kind of test between this area of support and down to this gold line, which is around, let's call it 617.70. All right. So this area is still of significant value to me. We did get a break on the advanced decline. And so with that said, the volume, if we take a look at how was the volume on that decline, and I'll be honest with you, man, I thought the volume was pretty weak. The volume was weak on the rally. The volume was weak on the decline. So I think the market might still just remain in that sell mode. When we take a look at in the trading range with upper end first test of these moving averages as resistance. So that's why I say two-sided trading. I think they're still going to find value near the areas of support, at least looking at this 35 area, which is only 40 handles, which we couldn't even get to. But I think if you start to see the market today, tomorrow, get back to the midpoint of this breakdown and under just near that swing area, and I want everyone to focus in on this for this week, this area here in the NASDAQ. So if I take a look at our weekly analysis, I mean, it's just above the daily pivot point. In fact, look at blue is above gold on a weekly basis. It's still kind of bullish, right? So the 35.75 area is an area of resistance, support. It broke down from that level and is probably going to come near that level on a daily basis. And that, if we test that area and start to roll, then I think you've got another test of this area in here. On the other side of the coin, if we do one of these, you know, you got to always be aware of an equal and opposite, which I don't think we're going to see the market come roaring right back. I don't see that. But weakness this week, 35.76 in the NASDAQ, and more of a trading range. We did a little bit of damage with the advanced decline on a daily basis. Weekly, or the volume was not that significant for me. So I'm starting to look at the Russell, and I say, okay, big decline on the Russell, light volume. We didn't get that volume move that I would have, you know, to say, listen, this thing's going down. I want to be the bear of the world, and I want you guys to, you know, hawk and pawn everything you got and buy puts. And I can't say that right now. I mean, this volume was fairly light. So my analysis does not say right yet that we have a longer-term top in the market. I think for the very least to identify the fact that the NASDAQ technology sector, look at the volume on a weekly basis. Look at our advanced decline on a weekly basis. We have the weakest sector, the internet technology, the XCI sector. This is a sector that starts to begin a seasonally weak period of time, and we couldn't even get a sell signal. Something's still not right if you want to be very bearish in the market. On a weekly basis, looking at the S&Ps, I mean, you have this huge decline over 2 days, and with the advanced decline on a weekly basis and no volume back behind it, we went from a bearish divergence on stochastics, and we're coming into an area here near the 50% level, which has held the market. And I just say, look where we are against a quarterly pivot support. So for me, I think for planning and scanning, it's important to say if I'm going to start investing some money in the market, what is my outlook? And for this particular week, I think we still have to remain focused in the fact that you're going to find some buyers underneath the market, and you're going to find, I think, sellers at this area. Even on the NYSE, we got to pay attention. The same thing happened. Old high, it acted as support, it broke through. So looking at the overall market, what sectors are still strong is again, we're looking at utilities, and we're also looking at energy as we enter a seasonally strong period of time. So I'm going to be focusing this week, and if we go change our page, and I just wanted to share with you that, I mean, these advanced decline and this volume analysis, if you're going to pull the plug and say, I'm bearish, I'll tell you what, last week's sell-off seriously wasn't all that impressive of a voluminous decline in the market on a weekly basis. So looking at some of this is the consumer discretionary. I mean, the first thing is on a monthly chart, we're coming all the way down into an area that could be support. And if you take a look and you say, well, Jesus, gee whiz, look where this market came from. This thing looks way overbought. And that is true. But when you look at this thing and say, what does it look like from the lost generation of the last 10 years? You say, look where it came from in 2009, but look where it came from 2007's high. So it is due for a pause, a correction, a consolidation. We go from trend to consolidation, and I think that's what we're going to probably see, more of a consolidation as we get more sector rotational pull and we get into seasonal events, and that's why I'm trying to look at this market from a broad-based point of view. And I tell you what, I think if we get the XLE and we enter a seasonally strong period of time, and we get the XLE back into maybe this zone of support right in this area here, which matches our monthly numbers around this 82 handle. I'll tell you what, I'm more interested in buying some of the stocks in the XLE and the OIH. And as you can see, we had this big decline in the OIH. And I'd like to know why we're not seeing significant draw on the downside in the volume. We are coming into support, monthly moving average support. So I'm not too interested in taking short positions in the energy sector right at this point in time. And if we take a look at long, it was very hard to find long positions, buy signals this week. But if you take a look at the buy signals that we get, JP Long Stock Weekly, all S&Ps, you'll find that we had those stocks that we recommended was a high close doji, was Exelon Corporation. Notice that we have EQT, which is oil and gas exploration. Interesting, I think Jabil Circuits in the technology space kind of matches with what the, of course, the NASDAQ was doing. And then Public Service Enterprise, PEG, and I think that was one of the stocks that we talked about last week as well, specifically on Thursday. Then when we take a look at QEP, notice it's oil and gas exploration. So in last week's big downdraft of the market, I mean, weekly buy signals. Look at this. 1 out of 6 symbols, 1, 2, 3, 4, 5 companies are in either energy and electric utilities. And so energy complex in the oil and gas, the XOP, that's telling me that there is a shift of sentiment of money going into that space. So I think that theme still continues. And if the economy was seriously in jeopardy of turning, I think that we would not be seeing the energy space and money going into that area. And for utilities, I think it's a good defensive play. We talked about it over a week ago when no one was interested in it. And now all of a sudden on this weekend, it was all about utilities and these things that paid dividend yields, et cetera, et cetera. So looking at short stocks in the S&P 500 on a daily basis, we had 109 symbols generate daily sell signals on Friday, 109 out of the S&P 500. So looking at my scans real quick together with you, out of 109, it was pretty mixed with consumer discretionary with, as you can see, 20 of the names out of, let's call it 100. Consumer staples, energy, very few names in energy. Financials, if we take a look at the financials, very few names, 11. Healthcare, a few. Industrials, a few. But information technology, and that's what we kind of talked about, information technology. So this is an area we're seeing a sector rotation in front of your very eyes. They're coming out of information IT, and we talked about that seasonal effect. Some of these bigger names, they're coming out of not all technology, but information technology. Here's Adobe Systems with a longer-term quarterly, and I want to change this back to a monthly. Here we have a monthly doji, Adobe. So I think if you're starting to look at the semi sector, semiconductors, these are areas that you might see a peak or money coming out or asset reallocation. So they come out of this sector. And here's fresh sell signals. Computer Science Corporation, CSC. EMC Corporation did not generate a weekly sell signal. But this company right here, Computer Sciences, Data Processing, weekly sell signal, and some pretty significant volume. So I think CSC has at least a shot for another $2 to possibly $4 to the downside. Looking at FistServe, FLIR system, this is one that I would also be taking a strong look at, would be Google, because Google came right up against, and I want you all to see this, that is our monthly pivot resistance on Google. So rallies back, I don't know if we're from 1120, I think 1138 in Google, something like that. I think Google, the fact that we are in that seasonally weak period of time for Google, the fact that we're starting to see that whole space kind of erode a little bit, and you might see some, in Google's a tough one as far as options are concerned, but I like the fact that we're starting to see the plan that we pointed out to you come to life. And so we do have, like, for example, NVIDIA, and then this whole list here of stocks, VeriSign. These are all names that I think that in that space, that internet software, the internet area that is starting to show signs of cracking, and we're seeing that sector rotational sectoring occur. So looking at utilities, we have 13 symbols. And on a daily basis, we take a little bit a closer look to these stocks, and you say, well, in the utilities, John, you said that that's a strong sector. Well, look at this, like, for example, this is ETR, Entergy. Yeah, it sold off, but it didn't go anywhere. And it's, I think what we want to do is look for the strongest stocks in this space. And I think that that's one of the keys. This is not a strong stock because that volume is not there. The stocks that we picked out, like EXC and PEG, they were a different personality and a different characteristic with the volume analysis. So with that said, utilities, I think, is still an area that until we get out of this range of the market, you're going to probably most likely see defensive plays, and the seasonal time for utilities is you can start looking at those right now. But the overbought area that we're starting to see the market finally comes in and shows its personality and some of these seasonalities that we talked about in last week's planning and scanning, and I know that video is available still. You can go review that, and I think that we are seeing that sector rotation move in the market. Now, let's talk commodities real quick. And in the sense of gold, crude oil, and treasury bonds. Treasury bonds, we talk also about looking at a knob spread. We're in an area of significant interest in the knob spread. Treasury notes as well. Looking at the treasury note market, we backed off the high significantly. This is the treasury notes in the middle quadrant. This is bonds in the upper. We are at that area that I pointed out several times of an old area of support and resistance. And I think the key is that with the notes, looking at the differential, we're at the level that we were back in here. And if you take a look at the pricing structure of treasury notes and you take a look at pricing structure at the same time, so comparing an apple to an apple, right? Look where we were with bonds. Look where we were with notes at the same point in time. So the knob spread has widened significantly because of the price differential between these two products right there. It's just that the market themselves, the individuals, are saying, hey, we're kind of weakening. I want to watch, and I think the key is to look for the treasury notes, not the bonds. Watch for a daily sell signal, and then look for maybe a push in the knob spread. I want to see the knob spread to see if it pushes up, pulls back, and then starts to erode. Also, you can just simply draw an old trend line here. Just because we're at the resistance area that I would like to do the knob spread, it doesn't mean I'm putting that thing on right now. So the bonds, they tell me as well that perhaps we've got more range trading going on into the equity because they haven't really given it up yet. So I'm looking at a knob spread, and I think that this area here is we want to be looking at this for signs of weakness now that we're at this old level of resistance and support. It's been acting as the knob spread has been acting as a since July, and as you know, we have a new event at the Fed meeting this week, and the Fed has definitely done a little bit of quantitative easing, back off from quantitative easing, I mean, and so did the stock market sell off because they're trying to get the Fed to say things are better, or is it weaker because of China's numbers? Whatever it is, I think whatever the excuse was, the market was willing to. It couldn't make the new highs. The stock market, it couldn't take out that yearly high. And the moral of the story is, the market's going to do what they want to do, except for here, the bonds. Watch Treasury notes. Watch Treasury notes. If you start to get a PPS daily sell signal, then that's telling me we're seeing some inherent weakness in the market. The same goes with the bonds. So whether you got Thinkorswim, and that's the opening bell here at 86.5, whether you got the Genesis package, regardless, you want to watch for the clues in the bonds and that knob spread to see if the boys are coming back and really looking for value in U.S. equities. Truthfully, this area will be defended. The old lows from 1220, this area right in here that we had on our charts in our trading room last week, this yellow area is going to be defended up until about 1807. So I want to leave you this for the week. Two numbers here, okay? In resistance world, we need to get back above, if the market can get back above last Friday. Let me go over to my day trading page here real quick. One of my comments was, I want to see this market, it needs to get back above a last conditional change above that 1792. I drew it in. You can see the dot right there. I said I wouldn't be interested in buying this thing to save your life unless we broke this downtrend line that we put in here and a last conditional change candle, and it was 1792. And all of a sudden, the market just continued to erode. Now, look what we just tapped up to this morning, 1792. So there's no way then I'm looking at buying this market and at least until I get a breakout above 1792. And then where can we go? Well, from there, your levels, I don't know if this pivot right here is going to offer enough resistance initially, but I do think that this area around 1807 to 1808, that's your next area of resistance. First test of that, 1800 and up from 6 to 8. Let's call it, I don't mean to be too precise, but watch 6 to 8. That's going to be a very strong area of resistance if you break out above this area. So above this area gives you opportunity up to there. When you get up to here, first test of that will give you a sell signal. So for day traders, swing traders, and for the rest of the week, you watch that area of resistance. For support, I'm saying around the 17 in S&Ps. You know, we probably want to test that low, which is 76. And, you know, from 76, would it surprise you to get, I don't think anyone here would be surprised to see an area of 1770, 75. That's a psychological area, but somewhere down in that zone for support. If the market's truly bearish, this also matches our daily support. So I'm going to change this and edit this into green. Because that area, one more washout to the downside, if you get a trend line break, something of that magnitude right in here, you get a trend line break, you watch for the market to get picked off down in there. That's going to be the next area of support. So here's the area that we have to work with for the week, and I hope those levels give you a little bit of better insights into the marketplace for this week. The health, the breadth analysis, looking at everything that we have, sector analysis, looking at still the best way to place to put your money is still here in the U.S. I think if I did not share it with you, let me just real briefly show this, and then we'll conclude our session together. When we take a look at the relative strength of the world, looking at the whole area, interesting that since the beginning of this move back in January of 2013. So this isn't over. It's from 2013, and it goes to current pricing. This is a relative strength of what the world is doing. What we have is emerging markets in purple, which is down here. We have Latin America, which is in red. We have Malaysia, which is in blue. I got Italy, I got France, I got the Dow, I got S&Ps, and I got Germany. And these are all the ETFs that you can look to track those performances of those markets. As you can see, we don't look at buying emerging markets until it at least gets positive. So money chases money, right? Germany is still positive. So they want to tell you that Europe's, not doing well. Germany's actually outperforming the U.S. And France is on the uptick right now. It's not, and so is Italy, for gosh sakes. So we're all pretty close in these areas of each other. So Germany and the S&P 500 are, I don't know if you find that interesting, but I found it interesting to see that Germany was still outperforming the S&P 500. So in any event, for the main markets that we want to focus in on, obviously the global economy does not look like it's from a standpoint of Europe versus U.S., looking at Malaysia, looking at emerging markets, but Latin America, guys and girls, Latin America and emerging markets. And what are emerging markets? Emerging market, if there's a problem in Turkey, Syria, that's an emerging market, right? Latin America, you had Argentina, you have Latin America, Brazil, you have Latin America, the whole scheme has not been doing well. And this relative strength here, this is exactly why you've not heard me be, and I come in here and talk about the way the market is from where do you put your money from a perspective of and when do you buy a sector. I'm not buying into an emerging market until A, it gets back above positive level, and B, we start to see higher highs and higher lows. And so with that said, that's why I still think unless we start to see a collapse in all of these segments right here, which so far we just saw a pullback, I'm not that ultimately bearish in the market. So I hope that concludes our session. Just to give you a picture speaks 1,000 words. You guys have a great trading week. And again, the focus is defensive. We're still defensive. We want to be looking at the selling opportunities in internet technology, IIX, because we talked about that last week, and also focusing in on long positions on the XOP, long positions on ET. You can use the ETF or start looking and scanning for stocks on a day-to-day basis as we move lower and maybe get it, establish this trading range as people digest the bottom pickers to the sellers, and we'll see who wins by midweek. We will also send tweets, and so I hope you found that information helpful, as well as understanding where is the money flowing going this week. So thank you all. Holding.